Happy Wednesday, everybody. In today's video, we are recapping what is arguably the best trade of my career, and I want to share that with you. What I was looking at, what my bias was, and how I was able to hold on to the trade literally the entire run from the lower standard deviation to the upper standard deviation past VWAP. And as you can see right here on the screen, we bought at 236, 20,236. We sold at 20,698. So we had a monstrous run up. It was over a 2.5 hour hold time. And you can see I bought in down here and sold up top. And this was all done on the My Funded Futures trading challenge that they are running right now through the end of the month. So thankfully, this trade is what allowed me to get my account back into the positive after going through a little bit of a drawdown. But this put me in the positive and then back towards the upside. The leaderboard, not too much of an update there, but let's get into the actual trade itself. So this is the daily chart. Now, mind you, we have what appeared to be a rising wedge, rising triangle, whatever you want to call this. We've been in an uptrend. And then what you're seeing here is all the talk about the Trump tariffs and everything that's looking to come down on the tariff side of things. But what you'll notice is that we've had over a week or so of heavy selling pressure. So we had a little bit of consolidation up here on Tuesday and Wednesday of the 18th and 19th of February. But from the 20th of February all the way through March 4th, so the last week of February through the beginning of March, we had intense selling pressure. And we broke this wedge to the downside. We retested the bottom of that wedge, pushed back down. But what I was looking at was that we've had that many days of intense selling pressure. At some point, the sellers do have to relent, and that the buyers can rebalance the books, so to speak, and bring the market back within range or within balance, whatever you're thinking of, if they're going to retest the bottom of this triangle, or if we were going to test VWAP. So what you'll notice is I have these four lines now on this chart. So the red line represents the anchored VWAP from the beginning of 2025. And then I have the VWAP here from the beginning of February, and this is the VWAP from last week of February, and this is the VWAP of the beginning of March. So you'll notice we did open up above VWAP, but we pushed down and then we started to push ourselves back up. Okay, so going into this trading day, my bias was to the long side. And I was confident within that. However, you could tell by the lower half of this wick that this was a very tricky way to get into and a way to spot your entry for this trade. So what was I looking at? And as you can see, it took a lot of trades on the day today, but I do keep my stop losses relatively tight. So I'm only losing maybe $100 to $200 per trade, trading only one contract. That's part of the rules for the challenge. You can only swing one contract. So you'll notice that I got in right here actually. This was at the break of the news. The reason why I entered the news trade is because I figured the news was going to be the catalyst that threw this market to the upside. Now, today on the news, we had factory orders and ISM services as well as PMI coming out at the, basically the open of the market. I mean, 9:45, 10 o'clock, the market's still figuring out which way it's going to go. So you'll notice I got in here. And then we had a very solid run up. This was a nice $4,000, $5,000 profit trade. However, I only ended up making $520 because I trusted that the drawdown would respect the first standard deviation and then we would launch towards the top of VWAP. That did not happen. Throughout the rest of the morning, we saw that the market was rather, imbalanced, but then sellers took over after this third, or I should say fourth test of VWAP, and we pushed ourselves back down. However, I wanted to trust what I saw on the RSI and the MACD to help me get into this trade and stay in the trade. However, the MACD didn't really give us too much of a good print on this, and I was mainly watching the 5-minute chart here to catch the bottom of this trade. And you'll notice that the volume as we were pushing down was relatively the same. And on this candle right here, which is where I entered in, we started to push ourselves back up. But you'll notice we had some interesting things going on with the cumulative delta as the morning progressed. So you'll see here we had a doji candle with only negative 27 on the delta, followed by a very strong push down of negative 643. Then buyers stepped in half that to 373. We had our what I believe was the last candle was 768, which shook out all of the week longs, and then this is where we got in at negative 200 delta and rode the wave up. Mind you, the reason why I trusted that this candle was to shake out the week longs was because we had 768 on the cumulative delta, but the candle was not nearly as big as this candle with almost 100 more sellers that were present. So as this started to push up, I was confident staying in this trade because we broke out here and here at 11:55 and at 12 with significant size that I figured we were going to push through VWAP and hold. Now, mind you, this candle right here is enough to shake everyone out at 105. But when I noticed that we were not breaking below this swing low here, we started to push ourselves back up and I stayed in the trade. So that was my trade from, we started this trade at 1150 and it sold almost at the top here at 215, and then we sort of chopped ourselves around for the rest of the day, taking some small wins, some bigger wins, some small losses. It is what it is, but we chopped here and I believe we will consolidate here now as we begin our second leg up tomorrow. I believe we're going to have a secondary push up and see how the rest of the week plays out. As we go back towards the daily candles here, looking at this, if we can respect VWAP for the beginning of the week, I think we will retest last week's VWAP, push us up towards the 21,000 area. Mind you, with everything that's coming out with the tariffs and all these things that are going on in the international stage, it's going to be interesting to see how the market rebounds. The market's lost, roughly 9-10%, I believe, so far. So it will have to rebalance itself at some point. We're coming in towards the end of the first quarter. The market kind of now knows what to predict with Trump's presidency, or at least the beginning of the Trump's presidency here. But we have some time as we go through March to see how this rebalances. I want to see these wicks get a little bit tighter, just to sort of signal that we have some continuation, because what you'll notice is with the smaller wicks on these candles, that usually signals a continuation move. And I ultimately think that's what's going to happen. So that is the recap on my largest trade of my career, $9,200 profit to get us on one contract all the way through. So got to take the market as it comes to you guys. Thanks so much for hanging out with me on this video. Please subscribe, share with your friends, comment down below with any questions, and I'll see you in the next video.